And for more on business headlines, we're joined by economist Mitch Roschelle. Mitch, thank you for joining us again. I'm confused. I'm just going to tell you that honestly. I read a headline yesterday that says a recession is expected later than expected. And it just tells me that no one knows anything right now. Do you know anything? I'm begging you.
I hope so, especially this time of the morning. Listen, I've said this before. If you get 10 economists in a room, you get 20 opinions.
But is that always the case, or is that right now? Is it particularly confusing right now, or is that always the case?
That's probably always the case, but I think the answer to your question is yes. It's always been the case, but it's particularly confusing right now because the data that comes out, whether it be the jobs report, whether it be these surveys about confidence, whether it be unemployment weekly claims, there's just myriad data that comes out and it seems to contradict itself. And that's because we have a very disrupted labor market where we have 2 times more open jobs than we have unemployed people. And normally when you have all of these other economic headwinds, you also have unemployment. So that's the challenge, because if you go back in history and look at other times when we've had inflation was coupled with unemployment. So that's why economists are so confused, because we're seeing something today that perhaps we haven't seen in modern history.
Well, yeah, I mean, there's a variation, there's a correlation there that high unemployment, so not a lot of people have jobs, means low inflation because not enough people have money. And the opposite used to be true as well. High inflation means low unemployment. Everyone's got money, they got money to spend, you get inflation. We are currently seeing really low unemployment, sticky high inflation. And I wonder, too, if you and I are contributing to this in some way. People are worried about the economy 6 months out. It's because they listen to you and I or people like us talk about how things don't make sense and how the economy has to go downhill, even though it hasn't yet.
I think one of the things that's happening, and there's a recent study from the Fed that says that millennials, and that's the largest generational cohort we have in this country, have racked up $1 trillion in debt. And that's up about, nearly 25% over the last 5 years. So I think what's happening is we feel good in the moment because we're satisfying our anxiety with retail therapy and we're shopping, but we know that those bills are going to have to get repaid at some point. So I think it's actually a dose of practicality that has Americans thinking that it may be okay right now, but it's probably going to get worse.
Everybody keeps preparing for this recession, and it just isn't coming quite yet. And as well, the earnings reports for these major corporations are all over the place, too. I was just seeing the other day, Target's Q4 expected earnings. They went above their expected earnings. So you're thinking, what a great economic sign. Retail's great. And then you look at Home Depot and Walmart, and they missed their expected earnings. So it's not just the stock market. It's not just the interest rates or inflation. Individual companies are having very mixed results, and there's just mixed indicators all over this economy.
Right. And, you can throw Lowe's into the mix. Lowe's actually did well in their most recent quarter, where their rival Home Depot didn't. So I think, listen, part of the story is, if you go back to the Target thing, let's call them Target for a second. I think they're picking up, and these discount retailers are picking up customers that they didn't have before, because customers are looking for value to try to get more for their money in an inflationary period. But the thing to look at when we talk about corporate earnings is the guidance from those companies about the future, which has been either bleak or, troublesome. So even companies are thinking that there's a recession looming.
All right, pretend you're Jay Powell. You are the chairman of the Federal Reserve. Do you throw up your hands? Like, what do you do?
I think Jay Powell's in a tricky spot, because he's trying to get that famous, stuck landing like an Olympic gymnast, which is really hard to do. And one of the reasons, going back to your question earlier, that people feel that there's a recession coming is because that's ultimately what the Fed is trying to do by raising interest rates. They're trying to grind down demand so that demand is more balanced with supply and prices come down.
Thanks for watching. Go to newsnationnow.com to find NewsNation in your cable lineup. And don't forget to click the red subscribe button below to get more of NewsNation's fact-based, unbiased coverage.